All right. Well, good evening, everyone. A very warm welcome to you all. We're very, very pleased to be sponsoring the discussion tonight. And before we get started, I just want to let everyone know that we are recording this evening. So we will have the recording available for you to review at any point. Just let us know after this evening. Welcome to CDC. This topic and thinking about financial inclusion, particularly with women as a segment of the consumer base and population, is very near and dear to our heart. We have just launched our gender strategy here at CDC just this year. We've done quite a bit of thinking about how we as an investor can participate in the conversation around women's economic empowerment and gender equality more broadly. And just very briefly, our gender strategy is really focusing in on kind of the core areas in a corporate value chain where we believe we can have an influence in the conversation with our investee businesses. And those areas are women in leadership, women as workforce, so thinking about job quality for women, women as consumers, and here's where we get into some very interesting territory where we are going to be able to, I think, progress the conversations with the companies that we invest in around tailoring and designing their products and services to serve women. And then, of course, women as entrepreneurs and women owners of businesses. One other thing I would like to mention that we've been engaged in very recently is a conversation with the other 6 development finance institutions of the G7 to launch what we're calling the 2X Challenge. I have my 2X pin on, which is a challenge and a call to action to mobilize $3 billion in investment in women by 2020, which is a very ambitious challenge, and we feel like we're ready to rise to it. But the core thing that we're very excited to drive out of this is to really define as an industry standard what it means to invest in women. What are the thresholds that we're looking at that make an investment meaningful for women within the businesses that we're investing in? So without further ado, let me turn this over to the panel, and I'm looking forward to a lively discussion. Thank you very much.
Thanks, Jen.
Right, so I just want to, on behalf of WAM, Women Advancing Microfinance, and the Financial Inclusion Forum, would like to welcome you all and obviously thank CDC very much for hosting us and helping us with the organization of this event. This is great to see so many familiar faces, people who are interested in gender, in women empowerment, in women financial inclusion, and I'm very proud to say that we have a 100% female panel, which I think is fantastic for this opportunity. And yet we have men in the audience, which I think is to be praised because gender is actually not just only about women, but it's also about how you find the right balance between men and women, as we more and more know, and as we more and more see being implemented on the ground. So this is an important thing for us to keep in mind. So just to let you know a little bit, this event initially was thought through from both sides of WAM and Financial Inclusion Forum. We really wanted to have something about women and the challenges they're facing, and why is it more difficult for women to actually cope with those challenges? You know, what are the reasons behind it? And it's interesting, as we were preparing for this event, we're even having some conversation in terms of, well, you know, it looks like there are challenges and there are difficulties. You know, what are the reasons why women are more vulnerable to external shock? Why is that for institutions sometimes more difficult to enter to those needs? And we really need to understand that the situation is complex and difficult, and maybe that's the reason why we are not there where we would like to go, despite all, you know, the movement around women empowerment, Me Too, and all those things that are starting to be raised in the media more and more. So there is definitely something happening here, and this is why tonight we'll be looking at this in more detail with our panelists. I'm very glad. Thank you so much again for CDC. If you have any question about the Women Advancing Microfinance Network, you can see Fatima, who is there. Yeah. She'd be very happy to answer any question you might have in case you have some desire to join the mailing list. If you are interested for the Financial Inclusion Forum, as you know, we are a voluntary board and we are very much committed to what we do, but we are all voluntary persons. So in case you are interested in making any contribution so that we can continue doing our job the best way possible, then obviously we will be very happy. So please do come and see me or some of my colleagues. We have Eugene here or some on the end. Thank you so much again for coming tonight. Very much looking forward to the event. Thank you very much.
Okay, thank you very much, Maude. Can everybody hear me from here, by the way? I just want to check on all sides. Okay, great. Hi, my name is Adrienne Klasa. I am the development finance editor of The Banker and FDI magazines at the Financial Times. I'm very happy to be here and to be moderating this panel on bridging the gender financial inclusion gap with a specific focus on looking at resilience and climate finance. So without further ado, I'm going to briefly introduce the topic, introduce the panelists, and then we're going to move into a discussion. Just as a quick note, we are going to have time for Q&A at the end, and I'm really hoping that this is going to be an interactive and tough audience, so please think up some challenging questions to put them to our experts here. So just briefly, I mean, why are we talking about gender in this context today? We know we live in a profoundly unfair world that sort of breaks along gender lines to a large extent. But it's especially unfair for poor women in vulnerable communities, particularly in developing countries. We know, for instance, according to the World Bank's Findex, that between 2014 and 2015, over 500 million adults obtained bank accounts and became financially included. 1.2 billion have done so since 2011. These are great numbers, but the gap between men's and women's uptake remains unchanged at 9%. We're not making progress in terms of bringing women into the financial centers of power in terms of designing tools and products that actually work for them. This lack of economic power and autonomy increases their vulnerability to economic shocks, to natural disasters, and to changes in their households' livelihoods. It limits their ability to build businesses and to make financial decisions for their families. And it, in a more fundamental way, and I think we're going to be talking a lot at this level today, it excludes them from power and policy making decisions that can improve their lives, that could design tools that are made for them, and basically look at how and improve their access to the kind of funding and financing that would improve sort of women's lots sort of more in a more broad-based way across the board. So I guess the big question that this panel is going to be interrogating is, why are women being left behind in terms of financial resilience? How can we work better to ensure that they are getting the tools and products that they need and that are designed to fit their needs? And how can we make sure that we are consulting and speaking both with women at the level of those in the industry, but also those who are stakeholders and end users? So without further ado, my panelists. So I have Isabelle Nowak, who's the Capital Markets Director at VisionFund International, which is the microfinance subsidiary of the World Vision International. They have a loan portfolio of 650 million, and they work with 1.2 million low-income clients, working on access to basic financial services through a network of 30 microfinance institutions. And she comes from a background in banking. So, and then we have Maria Largey, who's the Director and Head of Financial Institutions for the CDC Group. Maria works across, is responsible for the equity and financial institutions portfolio, specifically in Africa and Asia. And prior to joining the CDC, she also worked in microfinance and banking. So thank you for being here. And finally, we have Susan Forster, who's the COO of Global Parametrics. She has worked for more than 20 years in various parts of the financial sector, including at the NASDAQ and Lehman Brothers. She also worked at CDC Group, so
she's a good friend.
Yeah, so we can see how that transition has played out in terms of the kind of work she's doing now. And she has also worked, I guess, through Global Parametrics to sort of talk with DFIs and climate finance players and other stakeholders about sort of new ways at looking at resilience and climate shock financing and protections for women and for people everywhere. So let's turn to the fun part, the people you came here to actually listen to. we're starting this discussion from a premise premise that women experience shocks. They experience, whether they're climactic, whether they're economic, differently. Is this actually true, and do we have evidence for this? Isabelle, do you want to go first?
You've spoken about that a lot. and I said to Adrienne earlier that I was trying to look for some research articles on the internet. I think there's evidence out there that women would be more vulnerable to external shocks. And maybe I can cite two examples that are probably quite representative of why that is. So when a household experiences an external shock, so for example, a climate event, and as a result, they lose all their livelihoods, lose all their economic assets, then in order to be somehow able to survive, they will start cutting back on food, for example. For a woman that is pregnant or lactating, cutting back on food is a really, really big issue with long implications for her, but also for the unborn child. So here is one example, and I think that's quite a broad example. The other example would be, for example, if as a result of losing all your economic assets, you couldn't continue your business and you would have to go back into paid employment. And there, as a woman, you would face all the issues that are being widely debated at the moment, where you would possibly be more badly paid, you would possibly encounter some kind of discrimination in the workplace, etc. So again, that is a relatively generic example, but I think these are two big themes where women's vulnerability to an external shock is easily seen.
Yeah. Maria, do you have?
Yeah, well, I think it's the whole ecosystem, right? I mean, I think even in your opening, you touch on a lot of things, but there's cultural challenges. Then, if you look at access to finance, I mean, you can segment almost any area, right? Access to finance. Quality of jobs, like you're saying, the workplace being accommodating for women and the unique sort of needs that they have. It's products and services that aren't tailored towards the needs of women. Policy, you can look at the whole ecosystem, and you need a lot of different players to evolve and adapt for things to change. So I think it's a lot.
Susan?
I would argue that disasters probably exacerbate whatever imbalances already exist, and they make them more acute. So I was trying to think of some examples. Those were good examples, and I was trying to think of them, but then often I found they were a cultural example or as a presumption on my part of certain kinds of biases. In the end, I'm not quite sure which one will be the imbalance that exists, but a disaster leaves you a lot more exposed to whatever those are. Even things like no more electricity, you have to go further for water. I was thinking of all the different things depending on which country it is. And fundamentally, a disaster just makes that really that much harder to cope with whatever you're already struggling with.
So for each of your organizations, I mean, given that we can kind of identify, at least at sort of like the stakeholder level, that there are some of these imbalances, do you work through a gender policy lens? We obviously just heard a little bit about CDCs, but do your organizations sort of take that into account? And if so, what are the parameters you're looking at specifically? Maybe you can
maybe what I can do is expand on what Jen already said. So our gender strategy is relatively new. We're really piloting it or launching it this year. And we have taken a value chain approach. So versus having, I guess, hard targets and the rest, we're looking at, how can we impact women across the chain? So women leadership is one area. And so there we have a couple initiatives going on. We've helped seed something called the Boardroom Africa, which helps put women onto boards in African companies, but also focus on sort of management of senior level positions and the rest. Then you move to job quality. So we touched on this, but the work, and I can give a specific example of what we're doing in our portfolio. But working with some of our banks and our investees to assess first of all, to inform management and the boards why it's important, gender diversity is important, but then how to sort of incorporate that and change that culture within an organization and make sure that management's looking at it the right way. And then through, access to finance and through, products and services. And I can give you examples of all of these things maybe at a different point in time, but we have all sorts of initiatives going on how we can move, I think, from what was more of a push product for women historically, which hasn't been that effective, to more of a, pull product that is very focused on the specific needs of our clients. And, I think we started with financial literacy programs, which is sort of the basic, actually, even probably before that, started with sort of consumer women-focused products, financial literacy, but now doing much more innovative things, which I hope is the continued evolution.
I think we'll talk more specifically about products in a minute, but I wanted to hear sort of if you guys are also working sort of through a gender lens, if that is sort of explicit part of your organization's strategy.
Yeah, we named it as one of the 6 SDGs that we're aiming to have a serious impact for. Gender is probably one of the more significant because a big base of our clients are in agricultural sector and in banking or finance, but in a smaller microfinance local community way. And therefore we know that we touch women much more directly on a regular period. And so we'd like to grow as a company to be able to assess that impact and to understand what that means on the ground. But we're starting with the intention of being able to do that. And I think it's nice to have a startup so that you can plan those things in advance, theoretically.
Get a little laboratory to sort of test things out, too. Isabelle.
Yeah, I mean, as a microfinance organization, all we think about all the time is how to improve financial inclusion. And you've mentioned it before. I mean, the percentage of financially excluded women remains significantly higher than that of financially excluded men. So I would even say that by default, therefore, we have this gender lens because we want to increase financial inclusion. Also, because we are a mission-driven organization, we focus on going to rural parts of countries where we're present. And that is also something, that's another stat I'm going to throw in. The percentage of women in the poorer rural parts of countries is disproportionately high. So that gives you very naturally, when you go rural, it gives you a very high percentage of poor women. And as a result, we have more than 70% of our clients globally are women, and that can go up to 90% in Asia, for example. So there are regional differences. But yes, women are a very, very large part that we are trying to include financially. And then you come to the sort of distribution channels, the products that you offer, etc., which is also something we constantly think about. So we increase mobile distribution, for example, because we feel that women may improve their access to financial services if they can connect in remotely. We have specific products that we're trialing that would be focused on child education or loans for cook stoves. We try to work very, very strongly with our parent World Vision, who's pioneering, or has been pioneering for many decades, savings groups, which is where it starts for women, really, and then promote the women up to become microfinance clients. So yeah, I think we do have a strong gender lens as a result of what we're doing and where we're doing it.
So in terms of, I guess let's start at the bottom of the pyramid, as we call it. I mean, if we're talking about tracking financial inclusion as a pathway to resilience, the most sort of examined metric, or the most well-known, is the one that I cited, which is access to bank accounts and just having sort of, or mobile money account, depending where you are. Is this actually, if we're talking about wider resilience to widespread sort of systemic shocks, is this the right metric to be looking at if we want to talk about how women can be included? Susan.
That's a good question. I don't think I know the answer because our products are so new. So we'll talk about it a little bit afterwards, but we're designing financial solutions that we tend to sell at an institutional level, for example, to microfinance institutions. So a lot of what we're trying to achieve and the metrics we would measure will be the way in which our counterpart downstreams that, if you want to put it that way. But I also think that there could be a better qualitative analysis around how customized is the solution you're offering to the clients you're trying to serve. And in this case, if we're talking about a majority client base, which is female, the innovative thinking that went into that, I think, should be accounted for, because it's about quality, not just numbers.
Mm-hmm. Isabelle?
I think that it really depends which risks we're talking about. So in a way, if you think about the sort of smaller and frequent risks that households encounter, then access to a secure savings facility would be a first sort of way of building resistance. And also access to loan funding is another way of making sure that in an emergency, households or women can actually get a little bit more cash on their hands, so they can spend them on assets or invest them in assets that can make them more resilient, that can also help them to diversify away maybe from a class of assets that they're finding difficult to work with, say in a climate change situation. And then when you go down the severity path and you have sort of smaller or say slightly larger and slightly less frequent events, I think this is where microinsurance comes in. And that is certainly also a business line that we're looking at and actively promoting. And when you then come to events such as typhoons or earthquakes, which are really catastrophic and massive, this is where effectively, our experience is that the microfinance industry really struggles to maintain the supply of microfinance to the affected area. All of a sudden, their perception of risk also goes up, and they think that the client, which they know well, it has now become more risky and will not repay just because they find themselves in a disastrous situation. And that's really where microfinance fails. But if the idea is to maintain access to finance, to make people more resilient, then this is where you have to start thinking about specific solutions of helping microfinance business continuity, if you want, and maintain people's access to that sort of service. And this is then where we have been thinking about FDRM solutions, which we're probably going to start talking about in more detail later on.
Can you just say for others what FDRM is?
FDRM is Financial Disaster Risk Management, which basically means maintaining the microfinance institution's ability to operate in a severely disrupted situation, such as a typhoon or an earthquake. And we've trialed and set up a scheme that basically enables the microfinance institution to hand out emergency loans, to reschedule existing loans, and to basically maintain a normal service to their clients, who will then have access to comparatively significant amount of cash to rebuild their livelihoods very quickly.
So that actually leads nicely into sort of the next thing I wanted to move on to in terms of, what are the most effective resilience interventions and under what circumstances for women specifically in the work that you've done. Maria, can you maybe talk a bit about that?
Yeah, I mean, I think, so, dovetailing on the response to the last question, which is you have to look at what risk are you addressing, right? So I think that insurance, and we could stick with the insurance theme, I think, throughout the entire panel, but the insurance spectrum is quite broad. So from our portfolio perspective, we think about the client's insurance, right? So, I mean, it starts very basically, which is, well, I guess first and foremost, you start with a bank account, a savings account. An account doesn't mean anything, so I don't think that is the right measure to be looking at resilience, because husbands can open a wife a bank account and there's nothing in it, or she doesn't have access to it without his permission, and there's all sorts of issues with that. But making sure that there is access to money when it's needed. You have the microfinance institutions that help that at the bottom of the pyramid. You have the banks as you go upstream. Then you have insurance, credit life insurance, if they're funeral insurance. I mean, the types of catastrophes on a daily basis that happen to a lot of our clients are not things that we think of mind, but things that could put people back a year or two in terms of their livelihoods. And then obviously you have agricultural insurance, how to protect people on the downside. And so I guess we look at it through the lens of how can we protect the consumer or the end client versus the financial intermediary itself. Although I know this is the ultimate goal as well. And so we've been trying to figure out ways to work with our partners to pilot these types of products. Maybe we can help through risk-sharing facilities. Maybe we can help by brokering relationships with larger insurance companies and tailoring products. But that's really where our focus has been.
Susan?
So this is my opening to explain what Global Parametrics is, I think. As a startup funded by both DFID and KFW, our objective is to structure financial products, not necessarily insurance. I think the challenge for us is that the insurance industry has had quite a number of years to tackle these kinds of challenges in the developing world and have not made significant inroads. And I think the majority of them would say the same. They look at it a business opportunity. They'd like to. They don't exactly know how to tackle it. But we're lucky to be building this business at a time when, one, financial deregulation is occurring in a number of markets, and when technology is operating in a number of markets, and the bandwidth, the networks are so sophisticated now that there are multiple delivery channels, and therefore there are multiple structures, and therefore there's multiple price points, and therefore we can customize to suit who we think our client base is. And so we're actually kind of lucky to have a little more flexibility in what we want to deliver to clients based on their needs. So an example might be, I think Isabelle touched on it earlier, would be the mobile payments mechanism. You can do it through a phone, you can do it through a prepaid card, and you could run that, for example, through a local women's community association. They hold the cards, and the cards have no value until such time as an event occurs. And then whoever the sponsors are back up the value chain, as you mentioned earlier, start to inject capital into those, and they become usable on some form of network. Mind you, your network got to be up, so all those towers have to be fixed. So I think there's a degree of planning and training and integrating it into the lifestyle of the people in the community you're trying to help. So it's an integrated solution, not something that we can directly do all by ourselves. I think there's partnerships to be had in the community around gaining confidence around the types of technologies that will be available in this situation of an event. So there's coordination with NGOs and humanitarian organizations, even local government. So I think there are solutions that need to be packaged, and they need to bring together a variety of skill sets. And so Global Parametrics finds itself in a nice position to be working on the financial side of that, and we're very open to how to help community structure solutions that would be useful to their audience. So it's quite a different end of the spectrum, I think, than what Maria is working on at a very significant institutional scale, but we can kind of play in the middle. And I think we have a lot more flexibility than some of the NGOs who really have to focus on their end beneficiaries. We can play at the corporate level, institutional level, a little bit more aggregated level. We try to stay away from buzzwords, but the aggregator level is where we'd really like to engage, because they often know the people on the ground best anyways. So we don't need to have that distribution channel, but we need to give them something to go through the channel. So that's maybe an innovative way of trying to tackle the same thing.
And I think we'll come back to this sort of end user versus sort of systemic trigger sort of question in a moment. But I do want to hear from Isabelle about sort of what kind of products and what kind of interventions you think can be particularly effective in supporting women through sort of these kinds of times, challenging times.
Yeah, I would say that the sort of mainstay is, as I said earlier, is this access to a safe place to save money, and that also if you are located in a very, very remote place. I think that's something that we are very mindful of when we think of our rural women clients. Then there's access to loans, as I was saying.
I think you might have to speak up a little
Oh,
bit.
sorry. Yes. Okay. And then yes, the sort of the micro insurance bit comes sort of in the middle for more severe events that are nevertheless efficiently insurable with a micro insurance product. And then for us really comes the catastrophic level, where we believe that enabling the microfinance institution to continue working throughout a catastrophe and to not call back money, which is what they would normally do, but to continue the supply of liquidity into the affected community, that to us is we have shown that in before we launched our scheme to do that, we trialed it in the Philippines in 2013 and 14, if I'm not mistaken, after Typhoon Haiyan. That was the first pilot that we ran with about 5,000 families, whereby we intentionally, when we knew the typhoon had hit, we intentionally provided more liquidity to the affected branches and said to the loan officers to actually, rather than stop handing out loans to clients, to actually give clients recovery loans, apply a similar assessment process than we do on a normal day-to-day basis, continue to work with people and help them, give them more significant amounts of cash in their hands so they can rebuild quickly. And that was really an amazing sort of feedback that we got, because we were able to help the community back on their feet much more quickly. Imagine a fisherman, or a fisherwoman actually for that matter, who's lost his boat and his nets in such a disaster. With a recovery loan, she gets enough money in her hands to replace that boat and replace the nets, and then she can go back and actually do her job, which earns her a living. And if you actually are able to give this service to an entire community, then you're able to help the entire community get back up to a level where, you know, economic activity starts again and livelihoods are not completely destroyed. And following on from the Typhoon Haiyan example, we then later in 2015 and 16 we got a returnable grant from DFID, and we trialed exactly the same thing in 3 countries in Africa, Zambia, Malawi, and Kenya, that were very severely affected by El Nino, floods and droughts. And we did exactly the same thing. We extended recovery loans into communities which were severely affected by climate change. And we were able to show that that people were able to, in this case, actually also diversify their activities into more climate resilient areas of work. So that was actually a really interesting additional showing that we were also generating some learning opportunities from that. Basically our PAR numbers, portfolio at risk, which is a metric that we use in microfinance to assess the quality of the loans that we make. Our PAR numbers were no worse, so the credit was no riskier than what we were used to in these communities. But we were able to basically prevent cash being taken out of an affected community and help rebuilding. And I think this can very much be seen in a synergistic fashion with aid that comes into a community as well. So there will be, in severely affected circumstances, obviously the aid agencies will move in, etc. So there are generally a few participants out there which will hand cash out. But the amount of cash in an emergency loan is oftentimes more efficient to rebuild more quickly.
And it can be dispersed over time, right? It doesn't have to be
It
like
can
a week
also
later
be
or
dispersed
something.
over time, and what you can also do is also help people with rescheduling their repayments,
exactly.
which is
Repayment
often
holidays
an
or
issue.
something.
Yeah.
There's a really good VFI video on YouTube if you want to understand more about that Haiyan disaster and the exercise they went through. Very moving, very meaningful.
Which one is that?
So Haiyan in the Philippines, if you look up on YouTube, HAIYAN
Yeah.
and VFI, you can't miss
VisionFund
it.
International. Then you get that.
But in terms of sort of these kinds of recovery and bridge loans and emergency loans that you were offering in that scenario, to come back to the gender lens, what was the uptake like for women? I mean, were most of the people coming in male heads of families? Were these business owners? Was there any sort of takeaway in terms of the gender breakdown there?
I think the gender breakdown was as we would have expected it, considering what it was pre-disaster. So we would first and foremost reach out to the existing clients and then take on new clients. And if you have that sort of split men, women in a specific community, then you're likely to see the same in in a disaster, so we can maintain it.
One of the things we've been trying to think about is the financial inclusion angle from a training and financial literacy point of view. And the idea of these prepaid cards or mobile solutions creates a real window for training and for having these things in place in advance. And so I think if you have had people who are very close to their community think through how do you respond to a disaster before it comes, you have a lot better response. It's really disappointing when everyone feels depressed and is worried about their kids and is potentially injured. There's not a lot of thinking you can do at that point around financial solutions. Finance is always better if you think about it in advance and you put in place mechanisms that will kick in. And so I think we're really looking for that advanced planning to come from women in communities.
And are we doing enough work on this sort of preparatory phase? Right.
So financial literacy generally has been a big focus for us, actually, even not just with microfinance. I mean, actually we find under microfinance we need less of it because the loan officer tends to have a lot of access to the clients and they spend a lot of time with them every other week with the loan collections, actually with our larger banks and financial intermediaries. So one of our largest investments, RBL in India, this is a massive tier 2 bank, but they run and this is not out of their CSR, this is commercial reasons, they run a financial literacy program exactly for the rural areas because, I mean, if women don't understand the risks associated, talking about focusing on resilience still with the conversation, if clients don't understand the risk associated with the financial product that's being offered, this is also a massive risk. Do they understand the interest rate they're paying? Are they taking out loans that they can't afford? They understand what happens if there's a shock to the system or if their guarantor passes away. So we've been putting a lot of energy to ensure that financial literacy is there. I think insurance is even more challenging. It's even hard in the developed world for people to intuitively always understand why you need insurance. That's even trickier. And we're just at the early stages of trying to figure out what role we can play, but it's a big focus for us.
I think one of the fun things that we can do now is use climate change as an entry point for individuals who are thinking ahead. So climate change is a much bigger topic of interest for a much broader range of people. So it's not just women, but obviously women are more attuned to it, they feel it. And so when you enter that way, you're maybe not touching on some of the sensitive issues of finance and household finances and who has what money and things like that. But equally, from a challenge to anyone in the international community here who's involved in climate finance, we could potentially use some of that money and those resources and the folks on the ground who are involved with that to move into helping with this advanced planning, which would involve a financial component.
Yeah, so in terms of, convincing, let's say, women to purchase insurance products or to purchase them on behalf of their households or their communities or their sort of business association groups, is climate finance the best way in? What kind of pitch do you have to give them? Because it is true that if you're talking about a context where people have low confidence in government and low confidence in institution, somebody comes around and says, put your money in this pot, and then magically, when things go badly, we're going to pay out. You say this is a Ponzi scheme.
So Isabelle and I would like to tackle this one because we've been talking about the idea of parametric insurance, because I've just come off a conference of microfinance smallholder agriculture people, and everybody hates insurance. And you hate to hear that because honestly we should be encouraging people to protect themselves and think it through in advance, et cetera, like I said. But maybe one of the angles here is taking it up a notch so that you're not trying to put all of the burden of understanding and paying and maintaining and then sorting what happens after insurance, because anyone here who's ever claimed for car damage knows that your rates change, knows that you have to have a lot of bills from repair guys, a lot of proof of loss is what we're really talking about in insurance. The claims process, people don't trust, it can be slow, and it is expensive, and therefore that all gets loaded into your premium. So what we were hoping to do was cut out a bunch of that work with parametric and products, in which we go at an institutional level, sell it to a microfinance institution because it backstops their balance sheet, which enables them to have the liquidity they need to do all the things that Isabelle has described without the householder really having to pay for a microinsurance contract or any other kind of insurance. So in some ways, maybe it's less entrepreneurial locally. I know there are some good business opportunities for people to sell and build awareness around insurance, but in terms of a solution for disaster, which is obviously something you're protecting against 1 in 10 year, 1 in 20 year. This isn't something that happens hopefully annually, not yet. No, don't think that. Yeah. Parametrics easier because we can take some weather data, we can use global climate models. There are quite a number of free open source models. Some institutions have proprietary models, but you need the data to create an index for the kind of weather peril. So tropical cyclone in Myanmar, drought in Kenya, something like that. So you combine the climate data with what you know about what's on the ground, what crops have been planted, what buildings exist. If we're looking at cyclone, obviously, what standard are those buildings built to? And once you create the index, your institution, as your institutional counterpart, is able to say, well, I'm willing to pay X premium so that my financial circumstances are backstopped by money from us as a business, but our money comes from NGOs, comes from donors, comes from climate finance organizations. It can come from a range of sources, but eventually it will make it to individuals, but it's just been organized a lot in advance by other people. And I think that takes the burden off individuals. Is that fair to start with?
Yeah, I mean, it's so don't fret if some of this was a little sort of abstract, but because the idea really is that the individual is not the policyholder, and basically what we're protecting is the microfinance institution. We want the microfinance institution to remain in business. So what also I described earlier what microfinance institutions do in a disaster scenarios, they stop giving loans, but also they believe, or let's say initially, they may also, because their par goes up, because people really can't repay, they may also think that they're going to lose a lot of money on bad loans. So that impairs their balance sheet, which then also means that they appear less creditworthy when they want to take on new debt. So that then triggers this whole a sort of disaster scenario for business continuity. So the idea is that if you buy a parametric insurance product or parametric derivative, you as a microfinance institution get an insurance payout if externally through a weather station a certain climate event has been validated. You don't need to claim, you automatically get a payout. That will restore any impairment on your balance sheet, and you will be able to continue operating and take on additional funding that you can then hand out as emergency loans. So that is the idea, is that you do not have the end client. The end client will benefit from the MFI's presence to help them through the disaster, but the end client will have nothing to do with taking out an insurance or claiming for something. Maybe just a word on microinsurance, because it's obviously something we also do, and we're currently rolling out multi-peril crop insurance in a couple of countries we work in, and that is that's a major process, because as we know from claiming for insurance here, car insurance is a good example. You only qualify for a payout if you have followed a certain process in the run-up to the problem. So you need to be able to document that you have followed protocol, and then eventually your payout will come or it will not come. So following protocol, for example, in crop insurance is a really big thing. You need to have a load of people on the ground, which will help your clients follow protocol. So that kind of gives you a flavor for the micro level in crop insurance, for example, and it's something that we're wrestling with. We want to make it happen because we think the protocol will generate additional learning in terms of diversifying, for example, into crops that are maybe less affected by climate change, etc. So all that has a good side as well. But it's difficult.
And in terms of, but I mean, getting back to, again, sort of the gender lens, I'm going to keep harping on this, but if we're talking about sort of at the sort of parametric systemic trigger level, we're talking about insurance payments in the case of sort of a massive disaster to a financial institution, usually a microfinance institution. Don't we then get back to the exact same place that we were in the first place, in that there isn't a consideration of gender impacts in terms of how they're dispersing those funds, because clearly we're not doing that well to begin with.
It's fair enough. It's fair enough. It depends on so from my point of view, who the counterpart is. So I could choose to go to a women's co-op who have agricultural exposures. That would basically probably be 100% female run. I could go the other way and do something institutional that has very little to do. So in a sense, maybe what I can do as a person who has influence in a startup is make sure that when we look for clients, we actively seek out the ones that will hit that audience. So it's a good reminder that we shouldn't be as agnostic as maybe we are.
Right.
I mean, I think the bigger question you're asking is how do financial intermediaries or how do, anybody, I guess, targeting women clients get there, right? I mean, and how do they focus on it? And it has to start, I mean, there's another chain here, right? Which is the people that are addressing clients need to be educated as to the unique challenges and needs of the woman client base. So I'm going to use an example of a bank we're invested in Pakistan, which isn't the most, which has its own gender equality issues in the financial services sector. And, their starting point, they put out a gender quota initially and started with distributing pink credit cards, pushing, I would say, pink credit cards and saying, no, we have X amount of women clients. Well, clearly this doesn't mean much of anything, right? So then they got a bit smarter about it, and they decided they should focus on the loan officers, the client-facing people. We need to educate them on how to target women, how to speak to them, how to present the information in a way they could understand. And that was helpful in getting women around the table, but actually the products weren't right? So now we're in the next evolution, which is what are the unique challenges to these women? What kind of savings accounts do they need? If they need loans, what cluster of businesses are they typical? So therefore, what is the cash flow analysis that is associated with that? What are their barriers or their hurdles to get to a branch on a daily basis? What are the cultural nuances? And I think you have to be asking these questions in order to tailor products that are going to be appropriate for women, whether it's through resilience or for them to grow their businesses. And it's an education that has to happen across that chain of any sort of financial intermediary. And then, of course, the financial literacy, which is where we often start, is a part of it. But actually, in that big scheme of things, it's a very small component, right? It's a cultural change that has to happen within the financial institution.
And in terms, nuts and bolts, we talk about sort of engaging with women, we talk about engaging with the end users, stakeholders, consultations. In this specific sector, how do we actually go about doing this? How do we make sure that we're speaking to the women who are supposed to be the recipients of these products, and making sure that, what is actually being designed at the CDC in London or in New York City is actually effective for their needs?
So we talked about this today too, because I think the fact that you got so many female professionals in the room who are finance industry related and on the panel, isn't it up to us really to say, as a company, why don't we design products that speak to this audience? Why don't we as a company go somewhere where we can target this agenda? Why don't we participate in forums and groups where we're talking to people? It's sometimes difficult for somebody who's done this for 20 years and happens to be male to think through about things differently and for different audiences. But as women are now making up more and more of the workforce and participating even in non-formal sectors, having professionals who are catering to their needs has to be good business and an opportunity for them to become more entrepreneurial as well.
I can think of two things that we have sort of implemented globally across our network of MFIs, and that is firstly a very intentional push to hire women loan officers, and not just women loan officers, but also what we call experienced women in the community. So your normal standard loan officer is going to be a young male college graduate who has no particular insights into women or their needs at certain stages in life and what have you. So we're trying to reverse or to kind of get more diversity into our loan officer pool by hiring these women which have experience in bringing up a family, which bring a totally different perspective to what they're doing, which have essential contacts in the community, and can also be like a trusted sounding board for women clients. So that's something we're doing globally. And the other thing we're doing globally, and that's actually, it is just so basic, because I think every company should be doing it, but it's basically asking the MFIs to find out, to actually do client questionnaires, run client sessions where you ask them, what would you like? How would you like your product to be structured? When would you like to get it? How would you like to get it? Those sorts of very, very basic things. And to try and refine the approach a little bit. So yeah, and I totally agree with Maria. I think there are different levels which we need to address, from just making sure that a financial institution stays in business, to making sure that products are adequately designed and are adequately sold as well. Because if your selling channel is not adequate, then you could have very good products and still they wouldn't be getting to the right woman.
And why hasn't the industry so far been putting out these kinds of client questionnaires and sort of, if we're going to talk about a gender lens and gender sensitivity, that would seem to be the logical place to start. Is that being done?
It needs to be a part of their agenda, right? I think this is where we come in. We as CD, or any of us for that matter. I think if we're going to invest, we need to help make it a strategic priority, because it's expensive to do these things. They can, you can tout loans to anybody and not be so worried about whatever segmentation you're talking about, right? I think there's a movement from mass market financial product distribution towards segmentation, and it's a slow, painful road because it's expensive and it's cumbersome and it's more work. And now I think we're being forced to do that because people need to, consumers are getting more clever with technology and they have more, information. And so people are forced to segment. But also I know at CDC anyways, we feel a responsibility to ensure that our investees are spending time and energy on that. Maybe some of our capital or our technical assistance or our risk capital can be used towards doing that. But you are seeing a movement in force, it's being forced by disruptive technology. But it's not the easy route, right?
So I would suggest that what you're saying is, as investors, we need an agenda and we need to share that agenda and repeat it, because often it doesn't go around the first time. And then I would suggest that secondarily, we need to sell it as business opportunity. So women have fantastic awareness of what's happening in their community. They're super entrepreneurial and hands-on and responsible. So
we should every time.
We should push that as a good business thing.
So kind of to the point that you were making about, I believe it was an initiative in Pakistan where they sort of gave out sort of pink cards saying, we financially included women, hurrah for us. At the sort of, individual or sort of community level, should we be designing products specifically for women? Or is it about more adequately connecting them with existing tools and products that are already on the market? How do we work more effectively?
That's a good question. I think the answer is both. Okay. So I think and it's hard to generalize. So I think in some products you just need to understand how to reach the women, how to communicate to the women. Credit cards isn't a very highly inclusive tool, so maybe we'll move away from that one. But savings accounts, for example. Often a lot of culturally in the communities that we work in, it's the man that would have the ID, it's the man that would have access to the capital, so it's going to be the man that goes in and opens the savings account. Now, how do the law officers reach the women, or how do people reach them? How do they ensure that they can get on the ladder? That's probably more of a distribution question, right? Then when you get into, we're looking at developing a gender-focused SME loan product in Pakistan, and then I think you need to look at, what are the unique needs of women-run businesses? And there's clusters of typical women-run businesses. They have their own cycles, they have their own cash flow needs. So how do you develop a product that's specific to that is slightly different. So I think both.
Isabelle?
I would agree with that. Yeah, I think it really is both.
And in terms of, let's talk at sort of like the policy regulatory level in the countries, that are sort of on the recipient end of sort of a lot of these projects for developing countries. There's a lack of female voice just at the level of politics and sort of public policy. There is in this country as well and everywhere. So this is a global problem. And sort of how does this manifest in terms of, thinking broadly about resilience and how we sort of lay the policy foundations for that with a gender lens in mind? Susan?
I don't have the answer to that one, I have to say. You can either go around and come back, and I'll probably still say the same.
Okay,
Or,
fair enough.
you know, just, it would be the same thing for almost any of the issues we could talk about on policy, isn't it, really? I mean, if I'm looking at this as a disaster response, and I've got data, then I can use that as a tool, and I can educate anyone at any level. But my ability as a business owner and entrepreneur to be able to influence the regulatory system is comparatively limited. Explaining to anyone who wants to know why I care about the regulatory system as it exists and what could be done to change it, sure, I can say a lot of stuff. But that's, again, maybe back to an argument we had earlier around partnering with the appropriate institutions and organizations. So there again, DFID has a lot of influence in the markets we care about. There are sovereign level programs you could work with and upscale and downscale interventions. But from where I sit, I don't have a good answer to that one.
Isabelle, any thoughts?
Yeah,
You fixed this, haven't you? We've already.
No, not at all. And in fact, I mean, where we operate, the level that we operate, we often actually deal with the sort of negative consequences of people not being heard. I mean, that's almost our business. That's where we come in, where there is no agency. That's where we then go in. I had this flash thought as you were asking the question that we're part of World Vision, which is a children's charity, and therefore one of the sort of overriding targets that we have as World Vision is child well-being. And child well-being in our world view has a lot to do with overall an empowered family, a family that is being helped as part of a community, but a family, so not just the woman, the family, and being able to deliver a set of interventions, of which microfinance is one, and financial education is part of it, but also everything to do with smallholder farming and agricultural practices and resilience in disaster in communities. So all of this we deliver as part of a suite of interventions that World Vision will do in any country they're active in, which we hope gives a more holistic and hopefully a more sustainable path out of poverty. But obviously, where there is an inefficient government or a corrupt system, there's not much we can do.
Yeah.
So, Maria?
I mean, so it is frustrating how little of a voice or representation I think women have from a regulator perspective, from a policy perspective. We at CDC, I mean, I guess we sort of stand behind DFID, our shareholder, who does a lot of the policy work on our behalf. I think the things like that we're doing, like 2X, where you have a group of investors that represent a lot of foreign direct investment into these markets. If we show that this is part of our agenda, and this is something we're going to be driving that helps from a bottom-up perspective. We've seen some encouragement. I mean, I'll keep with Pakistan since I've been on that theme, but the Pakistan regulator put in this year that at least one woman has to be on every board, and had some targets for all of the banks in terms of female inclusion. This is all driven by the regulator. So you do see some evolution happening, which is promising. So it's not maybe all bad news.
And on that slightly positive note, I'm going to open the floor for questions. If you have a question, please say your name, put your hand in the air, where you're coming from, and please keep it relatively concise. Let's go. Was that a hand or was that a phone? Okay. How about sir in the front here in the pink shirt? Salmon, sorry.
Hello. I've got a very loud voice. My name is Gabriel Flores, and I'm from Learning Without Borders. And my question to each of the panel members is, this has been, by the way, really great talk and really great, fascinating hearing your views. What do you want the people in this room, who are of a variety of backgrounds, to take away? What action would you want people in this room to take to advance women, closing that gender gap?
All right, who wants to take that one first?
I like how you always encourage everyone with a call to action. You can't just sit passively. You got to actually do something after.
Susan.
But I think just from a disaster risk point of view, some of what we've discussed today has been a bit esoteric in terms of the way you structure financial products and the way you need to do that at an institutional level. Maybe to bring it somewhat down to earth, it's back to the climate agenda. If any of you are part of organizations that are thinking about climate, a lot of people aren't thinking about the financial interventions that need to happen because we can't actually stop climate change for a lot of people now. We might lessen it, but we're certainly not going to change it. And so I think in the meantime, mitigation activities, helping people assess and plan and think is what most of us can do on a daily basis, regardless of where we are. So I'll start with that one.
Yeah, I would
Isabelle?
totally agree with that. I think the climate change, if we can't stop it, then at least I think it's really in everyone's hands to be aware of what's happening and to maybe, within the bounds that we can do it, contribute something for it not to get worse. Yeah, I guess that's, probably a start, and I think that we're all well resourced and well educated, and we can do something about it. So encourage greener thinking and greener living.
Right.
Maybe I'll not take the climate end of the question, but the gender end of the question, but with the same theme, which is, I guess, a realistic answer to the question of what can we do on a day-to-day basis. And I think the gender challenge is not just in our markets that we're talking about. It's very much at home, and it's very much in our institutions, and it's very much all around us. So I guess the challenge I would put to this room is to be more mindful and perceptive about the gender challenges that we have here and make sure that we're addressing them on a day-to-day basis.
Great. I saw another hand. Lady in the spotted shirt. Also Sam.
Thank you very much. My name is Marini and I work for Care International. I wanted to find out how you were engaging the broader range of private sector companies, because a lot of these women we're talking about are either consumers or they are workers or they are, suppliers to big companies, multinationals, large financial institutions. So how are you engaging with them in this?
Who wants to take that one first?
Great question from my point of view. As a startup, we're very keen to come in at that corporate level, but help companies think about what the response is that they can do in a disaster scenario that keeps essentially their workers employed or back in employment rapidly. And it could be something even as much as giving them time off to sort out what's happening in their household before they come back. And so therefore there has to be a salary continuity fund, if you want to put it that way. So again, designing financial solutions, but you need to have a corporate or a counterpart who's actually interested in solving for that problem. So I think countries that have comparatively recently gone through something devastating are probably our best starting point. So we'd be looking to segment, if you want to put it that way, or prioritize those kinds of institutions or institutions that are particularly vulnerable. So you might think of a Unilever, for example, who has meaningful crop and supplier value chain vulnerability. So the idea would be that they have to be the counterpart because they have to care. And it is, frankly, going to get their business back up faster anyways, but we'd like to see it filter through to the workers.
Yeah, I think in our case, my response is going to be quite agri-focused. So, one of the initiatives that we're engaged in is actually making sure that our smallholder farmers or even larger farmers actually have access to end markets for their products. Also, if we encourage different, agricultural practices or diversifying into different crops, that we can make sure that these crops actually sell. I would say that's probably one of the more significant things that we do in collaborating with other private sector companies.
Maria.
We, by nature, invest in private sector companies. So at CDC, we invest into commercial entities and try to drive a development agenda as well as our commercial agenda. So that's sort of the heart of what we do. And then, so what we do when we invest in this regard is if we feel like there is a segment of the market, i.e. women, or a particular area like resilience and insurance that they're not doing, we have tools that we can help them do that. So we either can provide technical assistance, we can provide funding that is lower risk to them to allow them to experiment and pilot products that maybe they wouldn't do on their own because they are not so sure about them, but we can encourage them to try and do it at more subsidized funding. We also have because we have a portfolio across Africa and Asia, we often take what has worked in one market and try to do cross learnings with others. So we have a few tools in our playbook, if you will, on trying to encourage people to do it.
Great. I saw some other hands. I saw a gentleman in a bow tie.
Oh, thank you very much.
Yeah.
Well, my name is Gustav, and I'm with Songhai Advisory. And I think this session is quite timely because a team member and I have just returned from Ghana and Ivory Coast, looking at the cocoa and palm value chains. So there is a gender focus to that. And my simple question is, one thing that kept coming up was, there's this thing called the village saving loans. But the challenge, at this point I wouldn't call it a challenge, but then what I identified was, in such patriarchal societies where the female requires the permission of the husband to join such entities, what do you do in your situation? Do you walk away from it? Or so the other thing was, outside the cocoa season, most of these farmers go into mixed crop farming. So the women will often maybe go into plantain cultivation, XYZ, to keep the family afloat until the next cocoa harvest season. So it kept coming up a lot. So I'll be very happy to hear your views on how you are addressing this, for the better good of everyone here. Thank you.
Start with the question about we kind of touched on cultural differences or sensitivities a little bit, but maybe sort of this question of, when women are not socially permitted to engage directly with financial providers, what do you do?
We're not in that position to make those changes locally and socially, so I won't pretend that I have a good answer to that one. I think we identified the idea earlier that the better we get to know our client, and as I say, preferably at an organizational level. So what might be the way to tackle some of those issues would be just ensuring that there is some financial provision that will go to families via an agricultural processor. Those funds coming in at a very early stage of a disaster will hopefully make that family more resilient. It won't be necessarily targeted specifically to benefit a woman versus her entire family, but it's funding that they wouldn't have otherwise had. So I think I would start with the educational level of the institution or organization to which they're members or associated. And then once you're in there, then you start encouraging people. They do offshoots or they do women-only education training sessions and things like that. But from this point of view of a startup company trying to tackle a very large problem in a very large space, I won't pretend that I've got the answer to your question.
Yeah, I think I would just repeat what I said earlier about the sort of the holistic world vision approach of looking after an entire family as opposed to just picking out the woman. Works in that context that you've mentioned. I'm not saying this is going to solve each and every challenge, but it is a proven, for us, proven and collaborative approach of being able to have different touch points with different family members on different themes, be they education or agriculture or finance, to try to get, basically improve their incomes.
And if you're kind of a trusted counterpart in these situations, do you think that makes the husband or the head of the family more inclined to agree to some of those additional activities?
I think it does, and I think being a microfinance institution that is part of a larger economic development and advocacy organization such as World Vision makes that probably a little easier for us, because in the countries where World Vision is also present and we do intentionally work together, we can provide a much more sort of integrated solution to helping people.
Right.
have a similar response into that. We don't pretend that we can solve this issue. And we absolutely invest in organizations that have the role that you can only lend to men, because this, this is the way of the world in many of our markets. I think I go back to, I guess, what I've been saying, which is I think the first thing we tried to do, though, is understand why that cultural situation exists, and it's actually very different in different markets. So sometimes it's security. So if it's because they don't feel like the woman is secure to go to the branch and back by herself, well, there's ways to address that. You can have a loan officer go to their house. You can do a group of women that always meet together. Is it because culturally, actually, the man doesn't want the woman interfacing with a male loan officer on a regular basis? Well, you can fix that by only having female loan officers. Is it because the woman doesn't have collateral or the man just doesn't think that the woman can own her own finances? Well, then why doesn't he become a guarantor and she takes the loan? So I think you can't just make a sweeping answer. You have to, again, ask the question in that environment, what is the issue? And can we be creative about finding a solution around it?
And I'm going to get maybe Isabelle and then Susan to address this issue of sort of when you're sort of having loan or sort of insurance disbursements after disaster, and it's a mixed crop scenario. You have a cash crop, and then you have the crops that are sustaining the family, how that funding gets prioritized, and sort of how you sort of deal with making sure the family has what it needs to survive, but also that, they're still making income on sort of cash crop in a cocoa scenario. Is that something you think about at all?
Yes and no. Like I am very keen to understand what it is about a household that needs to be insured. It can be goods, it can be their livelihoods, it can be rebuilding. I think you mentioned fishing boats earlier. Sometimes there's equipment or shared resources in a community that are required to get things going again. So I'm very interested to know what it is that we're insuring and why. When it comes, though, to like if I have a vegetable garden that I'm using to feed my family, the likelihood of an institutional client, from my point of view, being as concerned about that directly seems to me fairly unlikely. Yeah. It's more the case that they'll care about the family unit and however they're functioning. So in the example you used of the cocoa industry, I can probably go into processors and give them some form of loan or financing that bridges until another crop comes in. Or I can negotiate with a seed company in a case where a crop gets wiped out, so that whatever crop was wiped out can be replanted, hopefully when you maybe have a second growing season. So I can come up with structural ways of dealing with it, but I can't really understand the individual household level and how I would fix because that's really their own little resilient solution in life, in a way. They're sort of working around the system by having those extra crops that they're managing for their own family benefit. That's a bit too specialized maybe from where we start.
Mm-hmm. Isabelle?
Yeah, and that it is actually a super specialized question you're asking, but to the extent that the borrower is known to us and his or her business is known to us, and we have been receiving a business plan and we know what the economic assets are that generate the majority of what they need to live, then we can make sure that is the asset that gets replaced effectively, because in order to take out a recovery loan, we would want to see a sort of, I call it business plan, but obviously an idea of where that money is going to go, and that it's not all going to go into consumption, but it will actually be invested into something productive. Exactly. And the example I was giving earlier of the learning from say climate change, that seems like it's not going to go away, and where you would want people not to repeat the mistake of planting crops that are not going to be resilient to a climate shock, then at that point I think the financial institution, if it's just a financial institution, that's a little bit too much. You need to have a partner which will help you and your client think through what the alternatives are and provide the right level of training and has a sort of insight into farming in that area. So you need to work with more than just a financial institution.
I think we have time for one or two more questions. There's a lady in the back over there. The red scarf.
Hi there. Sorry. I'm Shaheen from Islamic Relief Worldwide. I just wanted to kind of touch upon Islamic microfinance and how that is playing a very imperative role in accessing, for example, we know within our field we don't access interest. So part of the reason why they may not come to you is because of the whole kind of interest thing. And on a shadow level, we have Takaful, which is climate resilience, ethical funding on disaster risk insurance and things like that. So I think it's important to have those kind of debates about the other side of the stuff that is happening, because there's millions of people that get loans from Grameen Bank and other Islamic microfinance channels as well. And I just thought how you would incorporate that and how you would, for example, in Muslim majority countries, that's probably what they have. So when women are trying to access services, this would be one service that they would access as long as it has a no interest kind of product to it.
Does CDC engage with those sort of institutions directly?
Yeah, I mean, we don't have any exposure to only Islamic financial intermediaries, but as you rightly said, in countries that are mostly Muslim populations, and if we were to invest in a financial institution in those communities, Pakistan, Morocco, we have a few examples we can give, ensuring that they have an appropriate Islamic financing offering to their clients, and that segment of the community is being included is very important to us. And you can see that in all of our investments. I agree with what you're saying.
The interesting thing about what you're describing is really structuring to solve a problem. And if the problem is interest, then you just change the structure.
Well, it goes back to what we've been trying to say, right? Which is you tailor a solution to the need of the client, and that's exactly what Islamic finance is, right?
I agree. There was a hand there. Yes.
Hi, I'm Marilia from Lionshead Global Partners. I think that when we speak about financial inclusion, we often talk about it as something inherently positive. So I was just wondering whether, especially in disaster settings, whether you can see any harms that can generate, and how do you do as investors, as practitioners in the field, to mitigate those?
I have the happy ability to say that I'm on the end that provides money. It's Isabelle on the other half of my transaction that has to disperse that and potentially overload clients and put them in a position where they feel vulnerable and overwhelmed. So it's a very good point, and it was raised also in this smallholder ag conference we were discussing, because they've already got a loan. If you give them another loan, that doesn't necessarily make them feel like they can cope with it. So we're conscious of it, but I think on the ground you're a little more so.
No, I mean, I'm glad you bring this up, because it has to follow from this idea of pumping money into community, and can this really benefit everyone? And this is obviously something internally we've wrestled with a lot when we were making this sort of developing this approach. It is critically important to have loan policies that make sure that you don't over-indebt your client. And that is the case even before the disaster strikes. So ideally, if there is a sort of at country level an institution that is a credit bureau or something where you could find out information about your client, then that would be an enormous help. Oftentimes that is not the case, and then it really becomes the question of knowing your client and assessing your client. But it is absolutely right. And when we thought about, when we launched our ARDIS scheme, and when we thought about which countries of the 29 that we work in would qualify for this, then for sure we would leave all of those aside where we know that there is a sort of inherent tendency of maybe not being so good with the loan policy. So pre-qualifying an MFI to actually take part in a scheme like that means it has to be a really good MFI with really good credit policies and a really good follow-up of clients and a really good client assessment. So all of that is part of the readiness as well. And if your MFIs aren't ready to do that, then you have to bring them up to that level. And it would be irresponsible to actually sign up MFIs which have high par or have
doubtful credit policies to such a scheme, because then not much good would come of it. I do agree with you.
And it's probably worth asking yourself what the alternative is. So if it's just trying to save money under your mattress, how fungible is that, or how deliverable or useful is that in a disaster scenario? So I think some of these solutions, the alternatives are either worse or there is no alternative. So that, you hit destitution pretty fast. So we're talking about survival in financial context, and it might seem a little bit harsh or a little bit mercantile, but we can't solve some of the humanitarian stuff. So as long as the finances are there, there are probably other folks who are going to help with some of those support functions that would be much more beneficial.
We're running to the end of our time. Do we have time for one more question, or are we? Okay, one more question. Gentleman who's been waiting very patiently in the middle over there.
Thank you. So my name is William Debon, and I work for the GSMA and looking after humanitarian innovation. So my question is, have you worked with the telcos in that space of disaster response, finance, women? And if you have not, what role would you like them to play with you? Thank you.
Introduce me to the telcos.
So that's a yes.
That's what I'm talking to Maria about afterwards as well. But no, I mean, truly, we love the idea of delivering through different channels. And financial institutions are a mechanism that we understand well, although we recognize that financial inclusion is still a challenge. But there are far different ways of dealing with it, and there are far different ways of planning. They're comparatively rich. They're comparatively locally based. They have to have a network within a given region. So we would love to partner to find some financial solutions that would keep them functioning, as well as providing services through their networks.
Isabelle?
Yeah, we want to work with more telcos as well. So in particular, since I'm going to throw in yet another statistic, I think that there are many more women which are telco excluded than men. So So and obviously there is a host of benefits that we see in women being able to have access to telco and do financial transactions remotely, effectively. That would solve a lot of the security issues, privacy issues, and access.
So we'll structure it if you figure out who will take it.
So yeah, no, we'd love to do that.
Maria?
A resounding yes. I think telcos will inevitably be part of the disruption that will bring financial inclusion, to make financial inclusion or financial products affordable and accessible and get to the scale that we need. So absolutely.
All right, and on that note, I think we are out of time. But thank you to all the panelists. Thank you to all of you for listening and asking such astute questions. Thank you to Financial Inclusion Forum and Women Advancing Microfinance for organizing the event, and to CDC for hosting us here. All right.